Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going over a new portfolio strategy that I will be introducing to the channel. So this is going to be the second portfolio strategy. The Shield portfolio will still keep going. It is my primary portfolio. Now I'll be introducing the Sword portfolio, which is the ancillary portfolio. It's designed to kind of augment the Shield's portfolio's performance. So this strategy is more how I classify as how to build a high growth portfolio strategy for the stock market. So we're taking significantly more risk in this portfolio versus the Shield portfolio, where it's diversified and it's across gold, commodities, bonds, stock market. It has several different markets that it's invested in, where this is all going to be just stocks, particularly like high growth stocks or tech stocks. So we're going to go over kind of the individual components of the strategy, and going forward, I'm going to have the same format as the Shield portfolio, but now adding in the Sword portfolio. So two separate portfolios. Again, the Shield's the primary, so that's my main portfolio, and the Sword portfolio is the ancillary, so it's designed to support the main Shield portfolio. So if I have a gain in the Sword portfolio, I would sell off my assets and convert that to my Shield portfolio, and I would focus on protecting my Shield portfolio. Because again, this is high growth, so it's high volatility. So let's go over the investment strategy. This portfolio strategy is influenced by Cathie Wood and her investment management firm, ARK Invest. For those of you that don't know, Cathie Wood just I'll have more information on it, but runs a ETF business and has several different ETFs with high innovative ETFs. There's several different industries that it's involved in, but overall, this portfolio was influenced by her by focusing on like next generation kind of technologies and investments, and focusing on the ones I specifically like, or the industries I like, and then picking stocks that can represent it. The goal of this portfolio is to concentrate on stocks of individual companies in high growth markets. This portfolio will target companies that are involved in current and future technologies across several sectors of the stock market. It's basically everything I just covered. So, Cathie Wood and her ARK ETF. ARK is an actively managed exchange-traded fund ETF that seeks long-term growth of capital by investing under normal circumstances, primarily at least 65% of its assets in domestic and foreign equity securities of companies that are relevant to the fund's investment theme of disruptive innovation. That's kind of the term that she's thrown around a lot, is disruptive innovation. So we're looking for like future technologies. ARK defines disruptive innovation as the introduction of a technologically enabled new product or service that potentially changes the way the world works. Companies within ARK, that's ARKK, because that's the ETF ticker symbol, include those that rely on or benefit from the development of new products or services, technological improvements, and advancements in scientific research relating to the areas of intelligent devices, autonomous mobility, precision therapies, neural networks, next-gen cloud, digital wallets, digital assets, smart contracts, and multi-omic technologies. So there's a lot there. The ETF ARK is their main like flagship ETF, and there's several other ones, but the ARK has like several different kind of like of their best ideas, you could say, from each of these sectors. So I have the ARK ETF as one of my ETF or one of my investments, as well as several different stocks. So I'm going to go through those stocks now. There's basically sector-based investments, and then I pick a stock within that sector that I think has quote unquote the best odds or performance odds. So I'll go through all those sectors now, as well as the stocks that I chose, starting with what I argue is the most important one, the energy sector, and specifically looking forward on new technologies, looking at NuScale Power Corporation, or SMR ticker symbol. And it says NuScale develops small modular reactors, compact nuclear power units, 77 megawatt each, designed for scalability, safety, and cost efficiency. Unlike traditional large reactors, SMRs are factory built, transportable, and can be deployed in clusters to match energy needs. They use pressurized water reactor technology with passive safety systems, eliminating the need for active cooling pumps, reducing risks like meltdowns. SMRs offer reliable, carbon-free energy, ideal for grids, data centers, and remote areas, with faster construction and lower upfront costs compared to conventional nuclear plants. So essentially, if you think of those big, huge, like nuclear plant silos, this thing here will fit. These small SMRs will fit in a like a shipping container. If you see like a semi truck on the freeway having a shipping container cargo, it's like it'll fit in that size, so significantly smaller. So why I chose NuScale? So again, out of the energy sector, specifically I'm focusing on nuclear. Why I chose SMR? Their innovative technology, leader in small modular reactor SMR technology, offering scalable clean nuclear solutions, although they don't have like really deployable solutions. It's still very early days. Market demand, growing need for reliable low carbon power for data centers and grids supports SMR adoption. Regulatory milestone, the US NRC approval for 77 megawatt SMR design in May 2025 enhances credibility and commercial potential. Strategic partnerships, collaborations with Paragon Energy Solutions and others strengthen supply chain and project execution. First mover advantage, positioned to capture early market share in the emerging SMR industry. Long-term growth, potential for contracts in the US, Canada, and UK as global clean energy demands rise. So the first big sector I'm focused on is energy, and in particular nuclear energy, and small modular reactors are kind of the investment vehicle I'm going for. So that's the first one. So there's 9 more. Next, there's the water sector. And the company I chose is Consolidated Water Company, or WaterCo, ticker symbol CWCO. Consolidated Water Company Ltd. is a Cayman Islands-based company that develops and operates seawater desalination plants and water distribution systems. It supplies potable water, treats wastewater, and provides water-related products and services in regions with scarce fresh water, including the Cayman Islands, the Bahamas, the United States, and the British Virgin Islands. The company operates through 4 segments: retail, which is water utility for residential and commercial customers; bulk, supplying potable water to government utilities; services, design, construction, and management of water infrastructure; and manufacturing, producing water-related equipment. Founded in 1973, it uses reverse osmosis technology to produce potable water from seawater. So you take ocean water, remove the salt, now you have drinking water essentially. And since the Earth's surface is covered in 70% of water, there's a whole lot out there. So why I chose Consolidated Water in the water sector, why I chose specifically Consolidated Water. Stable business model, operates in water scarce regions, Cayman Islands, Bahamas, US, British Virgin Islands, providing essential potable water via reverse osmosis desalination. Diversified operations, 4 segments: retail, bulk, services, and manufacturing. Ensure multiple revenue streams from water supply, treatment, and infrastructure services. Strong financial position, boasts $100 million in cash with negligible debt, supporting long-term project investment and resilience. Strategic expansion, acquisitions, and growth in water-stressed regions like the Bahamas enhance revenue potential. So I think desalination technology is probably the best technology we should be focused on, kind of like energy with nuclear. I think nuclear is the best energy. I think desalination is the best water technology. There's a vast abundance of water. The amount of drinkable water on Earth is really small compared to the vast oceans on Earth that we could desalinate and get drinkable water. So I'm interested in desalination technology. Next is the agriculture sector, and I chose the Village Farms International, ticker symbol VFF. Village Farms International Inc., VFF, is a Canada-based company that produces, markets, and distributes greenhouse-grown tomatoes, bell peppers, cucumbers, and mini cooks in North America. Founded in 1989 and headquartered in Lake Mary, Florida, it operates through 5 segments: produce, Cannabis Canada, Cannabis US, energy, and LEI. The company leverages its expertise in controlled environment agriculture to supply fresh produce to retail supermarkets and food distribution companies. Since 2017, it has expanded into the cannabis and CBD markets, producing and supplying cannabis products in Canada and internationally through subsidiaries, like Pure Sun Farms and Rose Life Science. and developing cannabinoid-based health and wellness products in the U.S. via Balanced Health Botanicals. It also operates a power plant generating electricity and thermal heat. So why I chose Village Farms: diversified operations, strong presence in greenhouse-grown produce, tomatoes, peppers, cucumbers, and cannabis markets in Canada, U.S., and internationally, reducing sector-specific risk. Cannabis growth: Canadian cannabis segment, Pure Sunfarms, led with 31% sales growth in 2024, holding number 1 in dried flower and number 2 in pre-rolls. And the cannabis industry is a growing industry, so not just farming traditional crops, but also cannabis crops. Strategic restructuring: privatization of fresh produce segment via a joint venture with Vanguard Food in June 2025, focuses resources on high-margin cannabis operations. International expansion: new market entries in New Zealand and Netherlands, phase 2 expansion to quintuple production by Q4 2025, sign global growth potential. Also look at Village Farms as kind of having more like an indoor farm kind of technological appeal, where you can kind of create a farm anywhere in the world theoretically. So you don't need like the perfect soil or the perfect weather or anything like that. You can create a climate controlled farm, and I think that's a really good technology. And also adding in cannabis like as a new crop product. Finance sector: chose Coinbase Global. Coinbase Global Inc. Coin, ticker symbol, is a leading American cryptocurrency exchange platform founded in 2012. Headquartered in Wilmington, Delaware, it operates as a remote-first company with no physical headquarters. Coinbase provides a secure platform for buying, selling, transferring, and storing cryptocurrencies, including Bitcoin, Ethereum, and over 150 other digital assets, serving over 100 million users across more than 100 countries. It offers products for consumers, retail trading, a Coinbase Wallet, institutions, Coinbase Prime and custodial services, and developers for on-chain infrastructure. The company emphasizes regulatory compliance and security, providing tools like Coinbase Commerce for merchant payments and staking services for earning rewards. Coinbase is a key player in the crypto economy, advocating for economic freedom and blockchain innovation. As you know, in my Shield portfolio, I do hold Bitcoin, so I like Coinbase. I've used them for a long time, probably since 2017. Why I chose Coinbase Global: a leading crypto exchange, operates the largest US-based cryptocurrency platform with over 100 million users and 400 billion in assets. Diversified revenue: nearly 50% of revenue from non-trading sources like subscriptions, services, and USDC yield, which is a stablecoin, reducing reliance on volatile trading fees. Stablecoin growth: benefits from USDC adoption and stablecoin legislation, Genius Act, generating high margin recurring revenue. Pardon me. Strong financials: 2024 revenue of $6.29 billion, which is 150% year-over-year growth, and earnings of $2.58 billion, which is 2,620% year-over-year increase. So that's a lot. Regulatory advantage: known for compliance and trust, positioning it as a preferred partner for institutions and potential government initiatives. So that's my finance sector. So specifically going into blockchain. Manufacturing sector: chose Stratasys, ticker symbol SSYS. Stratasys develops industrial 3D printing technologies, focusing on polymer-based additive manufacturing. Their key systems include fuse deposition molding, FDM, which extrudes thermoplastic filaments layer by layer, and PolyJet, which jets photopolymer materials for high-resolution multi-material prints. These technologies create complex, durable parts for prototyping, tooling, and production in industries like aerospace, automotive, and healthcare. Stratasys printers offer precision, scalability, and material versatility, e.g. rigid plastics to flexible resins, supported by proprietary software for workflow efficiency, enabling rapid, cost-effective manufacturing with reduced waste compared to traditional methods. So in the manufacturing sector, I'm specifically looking at 3D printing. Why I chose Stratasys: leader in 3D printing, a key player in additive manufacturing with a strong portfolio of industrial-grade 3D printing solutions for aerospace, automotive, and medical sectors. Innovative technology, offers advanced polymer-based 3D printing systems like FDM and PolyJet, known for precision, versatility, and prototyping and production. Market expansion, growing demand for 3D printing in industrial applications and healthcare, with Stratasys well positioned to capture market share. Strategic partnerships, collaborations with companies like Siemens and Boeing enhance credibility and drive adoption in high-value industries. Diverse customer base, serves global markets with solutions for rapid prototyping, tooling, and end-use parts, supporting long-term revenue potential. Industry tailwinds, benefits from trends in automation, customization, and sustainable manufacturing, boosting additive manufacturing adoption. So of the manufacturing, I'm going into 3D printing. Automotive sector, chose Rivian Automotive. Rivian Automotive Inc. Rivian is an American electric vehicle EV manufacturer headquartered in Irvine, California. Founded in 2009, Rivian designs, develops, and produces electric trucks, SUVs, and commercial vehicles, focusing on sustainable transportation. Its flagship products include the R1T electric pickup truck and R1S electric SUV, and electric delivery vans for commercial use, notably for Amazon, and I have seen lots of those. Rivian emphasizes off-road capability, advanced technology, and eco-friendly design. The company operates manufacturing facilities in Normal, Illinois, great name, and is expanding production to meet growing demand for EVs. So of the automotive sector, this is the electric vehicle company that I'm invested in. So why I chose Rivian. Innovative EV portfolio, produces category-defining electric vehicles like the R1T pickup and R1S SUV, with the upcoming R2 and R3 platforms targeting affordable EV markets. Strong brand loyalty, ranked number 1 in owner satisfaction by Consumer Reports with an 86% would buy again rating, signaling robust brand appeal. It's always good when the customers like your product. Strategic partnerships, joint venture with Volkswagen up to $5.8 billion, and a pilot program with AT&T enhanced commercial opportunities and tech development. Production scale-up, operating a large factory with 50,000 vehicles a year, with plans to expand to 250,000 units for R2 and 400,000 for R3, boosting revenue potential. Cost efficiency gains, achieved gross profit in Q4 2024 with R1 cost reductions and R2 platform efficiencies expected to improve margins. AI and software edge, focus on autonomous driving tech and proprietary software. FleetOS positions Rivian as a tech partner for legacy automakers. So basically, like I said, the automotive sector specifically focused on electric vehicles. The data analytics sector, it shows Palantir Technologies, ticker PLTR. Palantir Technologies Inc. PLTR is a US-based software company specializing in big data analytics and AI, founded in 2003. It develops platforms like Gotham and Foundry to help organizations analyze and visualize large data sets for decision making. Gotham serves government clients, and particularly in defense and intelligence, for applications like counterterrorism and cybersecurity. Foundry targets commercial clients, enabling data-driven operations in industries like healthcare, finance, and manufacturing. Headquartered in Denver, Colorado, Palantir is known for its work with government agencies and its growing commercial sector presence, leveraging AI to solve complex data challenges. So AI is like the big buzzword of the past year or two. So this is the AI or data analytic company I'm interested in, Palantir Technologies. So why I chose Palantir. AI leadership, Palantir's platform, Gotham, Foundry, and AIP excel in AI-driven data analytics serving defense, intelligence, and commercial sectors. Government contracts, secured major deals including a $795 million DoD contract through 2029 and a $30 million ICE deal aligning with federal AI and efficiency priorities. Commercial expansion, U.S. commercial revenue surpassed $1 billion annual run rate with 64% year-over-year growth in Q4 2024, showing scalability beyond government. Strategic partnerships, collaborations with Microsoft Azure integration, and the nuclear company enhance AI-driven solutions in defense and energy. So this is my AI play. Then we have the healthcare sector, for which I chose CRISPR Therapeutics, ticker symbol CRSP. CRISPR Therapeutics AG, CRSP, is a Swiss-American biotechnology company headquartered in Zug, Switzerland, with operations in the US founded in 2013. It focuses on developing gene-based medicines using the CRISPR-Cas9 gene editing technology. The company targets rare and common diseases, including sickle cell disease, beta thalassemia, cancers, type 1 diabetes, and cardiovascular disease. Its lead therapy, exagamglogene, autotemcel, XSL or Casgevy, developed with Vertex Pharmaceuticals, received FDA approval in December 2023 for treating sickle cell disease and transfusion-dependent beta thalassemia. CRISPR Therapeutics also advances in vivo programs like CTX310 and CTX320, targeting cardiovascular conditions, and has partnerships with companies like Vertex and Bayer. This is a complicated one, but gene editing, just finding the whatever disease cancers in the human body and editing the DNA. It kind of gives a little graph here on the left, but it's pretty crazy. But in the healthcare sector, this is the technology I'm interested in. So why I chose CRISPR Therapeutics: pioneer in gene editing, leader in CRISPR-Cas9 technology, developing transformative gene-based therapies for serious diseases like sickle cell disease and beta thalassemia. Approved product, Casgevy, an FDA-approved therapy for sickle cell disease and beta thalassemia, provides a revenue stream with potential for expansion as treatment centers grow. Diversified pipeline, robust programs in oncology, CTX112, CTX131, cardiovascular, CTX310, CTX320, and type 1 diabetes, CTX211, offering multiple growth avenues. Strategic partnerships, collaborations with Vertex Pharmaceuticals, Sirius Therapeutics, and others provide financial support, validation, and shared development costs. Strong financial position, $1.86 billion in cash and marketable securities, supports ongoing R&D and clinical trials despite high cash burn. So this is the healthcare sector play. Now, defense sector, AeroVironment, ticker symbol AVAV. AeroVironment Inc., AVAV, is an American defense technology company headquartered in Arlington, Virginia. Founded in 1971, it designs, develops, produces, and supports advanced robotic systems focusing on unmanned aircraft systems, UAS, loitering munitions, and high-altitude pseudo-satellites for government agencies and commercial clients in the U.S. and internationally. Operating through segments like autonomous systems in space, cyber, and directed energy, the company provides small and medium UAS, e.g. Raven, Puma, Wasp, loitering munitions like the Switchblade, counter-UAS technologies, and ground and maritime robotic systems. It also offers services such as training, repairs, and payload integration, primarily serving the U.S. Department of Defense and allied governments. So a big player in this is like drone technology, but is a big reason why I chose this one. So the drone technology aspect. So I chose AeroVironment, leadership in drone technology, pioneer in uncrewed aircraft systems, UAS, and loitering munitions, serving U.S. Department of Defense and international allies. Blue Halo merger acquisition doubles revenue potential to $1.9 billion to $2 billion in fiscal year 2026, expanding into air, land, sea, space, and cyber domains. Defense spending tailwinds, benefits from $150 billion defense bill, and rising global demand for counter-drone systems amid geopolitical tensions. Innovative portfolio offers AI-powered solutions like Halo Cortex, OSINT, and advanced systems like Red Dragon, UAS, enhancing market edge. So this is the drone kind of play. And then the aerospace sector, which shows Rocket Lab Corporation, ticker symbol RKLB. Rocket Lab USA Inc., RKLB, is an American aerospace company specializing in small satellite launches and space systems. Founded in 2006 and headquartered in Long Beach, California, it designs and manufactures the Electron rocket, a reusable launch vehicle for small payloads, and the Photon spacecraft platform for satellite missions. The company provides end-to-end space services, including launch, satellite manufacturing, and mission management, serving commercial, government, and scientific customers. Rocket Lab operates launch facilities in New Zealand and the United States, and is developing the Larger Neutron rocket for heavier payloads and interplanetary missions. So why I chose Rocket Lab? Launch market leader, commands 50% of the small satellite launch market, with the Electron rocket boasting a 98% success rate across 67 missions. Vertical integration, evolving into a full space systems provider through acquisitions like Geost and Mynaric, how do you say that? Expanding into payloads and space logistics. Neutron rocket potential, developing Neutron for larger payloads with a $50 million per launch contract secured, targeting constellation deployments and national security missions. Frequent launches, achieved 4 Electron launches in June 2025 with a record fast turnaround demonstrating operational efficiency. Government contracts, selected for the $5.6 billion NSSL Phase 3 Lane 1 program, positioning Neutron to compete with top US launch providers. So it's the spaceship company. So now those were the investments. So all the 10 stocks, and then the one ETF, the ARK ETF. So the strategy is going to be similar to how I do the Shield portfolio for the dollar cost averaging part of it. So I'm going to set up recurring deposits. Going to choose duration that matches pay period. So for me, it's every week. Choose amount of money that won't be missed if lost. Lunch money. That's kind of what I tell myself or tell other people if they ask me how much to invest. I'm like, just start small. Just think of like whatever you would pay for like a normal generic lunch, like just a little bit of money. Just start with that. So with the platform I use, M1 Finance, I do $10 a week with my Shield portfolio. So I'm just going to follow that same setup and do $10 a week for the Sword portfolio, and then set the duration of automatic deposits to not stop. So they're just going to keep going and going and going. So every week's going to auto deposit $10 into the cash account, and then on the third week, when it exceeds that $25, which is M1 Finance's minimum before you can deposit, it will put in that $30 after the third week into your investment portfolio. And then allocation. So set a percentage of capital to each asset. So all single stocks will be at a fixed 8%. So all 10. So just to recap. So new scale SMR will be 1. Will be at 8%. Consolidated Water at 8%. Village Farms at 8%. Coinbase at 8%. Stratasys 8%. Rivian at 8%. Palantir at 8%. CRISPR Therapeutics at 8%. AeroVironment at 8%. Rocket Lab at 8%, right? So all those are going to be at 8%. And then the ARK ETF, ARK will be at a fixed 20%. So the ARK ETF is a collection of innovative stocks because it's the ETF where all the other stocks are single stocks. That's why the ARK ETF has a higher percentage, because there's multiple stocks in that one. And these percentages will remain the same for the duration of the portfolio for now. What I mean by that is over time, I'll probably get more strategic, and at times in the market where certain stocks are doing well, I might increase allocation a little bit. So like right now, as an example, AI, Palantir, Aerospace, Rocket Lab, finance, like Coinbase, like those ones like have been going up. So like theoretically I would increase maybe from 8% to like 10% as an example, each of those, because they're doing good, which means I would reduce some of the other ones that are doing bad, like Village Farms isn't doing that good. I think CRISPR Therapeutics isn't, and Rivian isn't, as an example. They're down, so I would like reduce my position to that. So that's like getting more strategic. But as of right now, starting out, I'm just going to keep the percentages flat, right? I'm going to keep all single stocks 8% and the ARK ETF 20% to keep it simple. Rebalancing assets will be done quarterly or for profit taking. So every quarter, I'm just going to rebalance, regardless of how much the ETFs or positions move in terms of the capital, like up or down. I'm just going to rebalance every 3 months. So I'm going to sell off the profitable stocks and buy the unprofitable ones. So it's just going to keep recycling. Or it's going to be, I'm going to sell for profit taking. So the way I look at it is my Shield portfolio is going to be a certain amount in terms of value, and my Sword portfolio is going to be a certain amount in terms of value. And when the sword portfolio starts exceeding more than half of the value of the shield portfolio, like going up towards like 100% equal value, I'm going to sell off a portion of the sword portfolio and transfer that to the shield portfolio, because the shield again is the primary portfolio and the sword is the ancillary portfolio. So the ancillary portfolio augments the shield portfolio. So that's the point of it. So shield portfolio is the primary. That's where everything's going to be at. That's where the majority of my money is going to be. That's where my like most safe investments are going to be at. But the sword is very high risk, so I'm going to sell off when I can for profit, hopefully, fingers crossed, and then give that to the shield portfolio and grow from there. And that's basically a run through of the sword portfolio, which I will be starting on this channel. So I'll probably give my first update on that next week, probably after my shield portfolio. And then just every week, kind of same thing I could do with the shield portfolio, I'm going to give an update on the sword portfolio and talk about both. So we're going to have the shield, which is the primary portfolio, the diversified portfolio. And I'm going to have the sword, which is the ancillary portfolio, which is the high risk portfolio. So now I'm going to have two different strategies that you can watch and learn from on this channel. So as always, if you have any questions, comments, or criticisms, let me know. And look forward to seeing the new features and the new performance of this portfolio. Have a good day.